A little earlier today, we are excited about inviting Bob Chapman from the International Forecaster on the line, and there is so much going on in the world. Who better to talk economics with than Bob Chapman?
Welcome, Bob Chapman.
Well, I'm very happy to be here again.
Bob, 2 years ago, officials said the worst recession since the Great Depression ended. I'm sure you've heard that. The stumbling recovery has proven to be the worst economic disaster since the 30s. You agree with that?
Absolutely.
Oh,
I
man.
wrote in the International Forecaster 2 years ago, February, so we're 29 months into, 28, 29 months into this inflationary depression, but the mainline media doesn't want to talk about that. They seem to think that things are otherwise, and that's because Wall Street and the Federal Reserve and the Treasury Department tell them that everything's going to be okay. And, of course, everything is not going to be okay. The problem that is now abundantly clear is throughout the world, we have a falling off of retail consumption. And that's without figuring in the increases in inflation. Like England admits to 4.5%, 5% in that area. And the figure is really around 12%. America is talking in terms of 3.6%. The real figure is over 10%. And it goes on and on. And if those inflationary figures were deducted from the increase in public consumption, the figures would be minus, maybe 1 or 2%, depending upon the country. And so the world economy is slowing down again. And the only way it can continue to stay above even, right now it's about 1.8% growth. And those are official figures. Goodness knows what it really is in the United States. And we got the second half of the year coming up. And what we're being told is that it's going to be better. Well, I get news for the government economists and the Treasury and the Federal Reserve. It's not going to be better. It's going to be worse. Unemployment is 22.6%. And you say to yourself, gee, the government's telling us it's 9.1%. Well, it is if you only look at U3. There is U1, 2, 3, 4, and 5. All different aspects of unemployment. And if you put them all together, you come up with a figure called U6. And U6 is 16.38%. But there's one more thing that we have to take away from U6, and that is the birth-death ratio. And that is something that was concocted by the U.S. government. And what it does is it supposedly figures out the creation of businesses and the death of businesses. And they don't do that. They just guess at the figure. So if you deduct that addition to U6, what you come up with is 22.6%, which is about where it was several months ago. And that meant the imposition of QE2, but particularly Stimulus 2, has now run its course. And what the Federal Reserve has to do now is decide what they're going to do in relation to the economy from here on out. And they tell us they're not going to have QE3, but of course they are.
There's no other
Because
way
if
out,
they
is there?
don't, the economy will collapse. Why? Because the Fed has been buying 80%, approximately, of U.S. Treasury bills, bonds, notes. And if they stop doing that, and the bill on that this year will be anywhere between $1.7 and $2.3 trillion, the economy can't continue.
Bob, I don't know a single individual that is doing well. I really don't. I don't know anyone who is better off than they were 10 years ago. I really don't. Is that typical?
That's a summation of what I've been talking about, and it's continuing to deteriorate. And another thing is that in August 2nd, we were supposed to have a renewal as the Democrats and Republicans got together, a renewal of the short-term debt for the United States. It's $14.3 trillion. On May the 16th, they froze it there. They said by August the 2nd, everything will be figured out, and we'll get an extension to $16.7 trillion. What we have found is that the Democrats and Republicans can't get together on what they want to do in the realm of cutting the budget and increasing taxation. And so what has happened here in the last week is that the Democrats and Republicans have said, well, we're going to give it another extension. Till when? I don't know.
Yeah, Bob, that's a good point there. And Republicans want to cut spending. Democrats are talking about raising taxes as usual, and those are some issues we will talk about right after this brief quarter of the hour break. This is Mark Wright. I'm here with Vincent Finelli on USA Prepares, the radio program. We'll be right.
No whining. Only expert guests and seasoned opinions. Instruction that matters. At the controls, Vincent Finelli and Mark Wright.
And this is No Whine Tuesday because Bob Chapman is on the air. There's no whining with Bob Chapman. He just tells the truth. And we're back on USA Prepares, the radio program. I'm Mark Wright. I'm here with the original survival economist, Vincent Finelli. Bob, when we went into the break, I wanted to ask you a question. Alan Greenspan came out here in the last couple of days and criticized the Federal Reserve and Bernacke specifically and said quantitative easing number 1 and 2 was a failure. And there should not be a quantitative easing number 3 because it will further devalue the dollar. But I agree with you, they have to do it. What gives with Bernacke and Greenspan?
Well, I think that Greenspan is trying to justify the terrible mess that he left the U.S. financial system in after having been appointed in 1988 and spending many years there. He created one bubble after another. First, it was the stock market .com bubble, and that ended in March and April of 2000. And unable to get the economy going again, he created the real estate bubble, both residential and commercial. And we are seeing the results of Mr. Greenspan's folly over those years. Back in 1995, and 96 and 7, he could have stopped the increase in money and credit, but he didn't do that. And when we had the .com bubble, all he had to do was increase margin requirements from 50% to, say, 60% to slow down the madness that was going on in the stock market at the time. Then they took interest rates down, the Federal Reserve did, and at the same time, they increased money and credit again, allowing the real estate bubble to form. So he's trying to deflect what he has done, and that's why he's saying what he's saying. He really left Mr. Bernacke, who's really done a dreadful job, but he really left him a can of worms, and there's no other way to call it. Why Mr. Bernacke took the job probably is because nobody else wanted it. You have these academics from Princeton and Harvard and other ivory towers, if you may, who think they know because of studying history what could be done. And, it's interesting that Mr. Bernanke is doing exactly what he wrote about in 1988 with Mr. Boskin, another economist, and they said what Mr. Bernanke is doing today doesn't work. And so you say to yourself, well, gee, why would he do such a thing if he knows it doesn't work? And it's very simple. There's nothing else to do except purge the system. And Wall Street and government doesn't want him to destroy the system by allowing it to purge itself. And that's the two avenues they have to take. Go ahead.
Bob, about 3 years ago, our daughter wanted to buy a house. And I was talking to the real estate sales agent, and he said, "No, I think we've hit the bottom on real estate prices." This was 3 years ago, and I said, "Oh no, it's no way. We're going further down." And he said, "Well, let me bring in the boss." So he brought in the broker, and she said, "Oh no, I think this is the bottom." And I said, "I'll tell you what, I'll bet you a hamburger." And I picked a place at the mall. Well-known establishment at the mall, and I said, "I'll tell you what, I'll if you're right, I'll buy you a hamburger, and how about if I'm right, you buy me a hamburger?" And since then, that hamburger joint's gone out of business, and real estate prices had continued to fall. So it doesn't seem like we've hit the bottom in terms of price.
I think you're right, and we projected another 20% fall. But if you remember, we told people in November of '04 to start thinking about getting out of real estate of both types in the summer of '05. And that's when the decline began. You have to take it section by section in the different parts of the country. It became manifest in '07. But the point is that it's been a long way down, and it was very, very easy for me to predict that. Gary Schilling of Yale, a professor and an economist there, came along about 9 months after I did and said the same thing. This falling down of real estate prices has now been deeper than I had anticipated. I thought countrywide it would be about 35%, maybe 40% on average. We're passing that now. There are sections of the country where residential real estate is falling 60 to 75, even 80%. But those areas probably won't see any further drop, but others will. And so what we're looking at is a continuation. And, 20% on a $150,000 home is not especially bad, because previously we've already seen 35 to 40%. What is bad is that, let's assume 2 years from now we hit the bottom. There's no recognition of how many years it will be that the real estate economy will stop bouncing along the bottom. If you look back historically, since the Second World War, the average correction's been 8 years along the bottom after all of the falling had taken place. This time, it may be much